Hi, welcome back to Simply Accounting. In today's video, we will be working with a problem, and it's for business transactions. And so we will see how business transactions affect certain accounts. So let's get started. So this problem is about small appliance repair shop. And so these are the beginning balances for asset accounts as of January 1st, 2013. So the first one is a cash balance of $2,000, so that's the beginning balance for the year. Supplies was $500. The beginning balance for equipment is $6,000. And the beginning balance for furniture is $1,500. So there are four business transactions that we will do for the month of January. So the first one is that the business purchased $400 worth of furniture with cash. So we will go to the T accounts, and because they purchased the furniture with cash, we'll do the debit first. The debit will be $400 to the furniture account. So you will put on the debit side of the T account because you're purchasing more furniture, so it will increase your furniture account. And then because you purchased it with cash, you will decrease your account, so you would put it on the credit side of the T account. So that's how you would post both of these transactions. And in each transaction, it should affect at least two accounts, and it should have a debit and a credit. It has to have a debit and a credit, and it has to affect at least two accounts. So the second one is that you returned a defective piece of equipment that was purchased last month. And now you're receiving a cash refund of $1,200. So in this case, you will debit cash because you are receiving cash back from the bad equipment that you bought last month. So this would increase your cash account, so you would put on the debit side of the T account. And because you return the equipment, it will lower your equipment account. So you would put on the credit side of the T account for $1,200. Now the third transaction is you purchase equipment for $500 with cash. So in this transaction, you will increase equipment, so you put it on the debit side of the T account for $500 because you purchased more equipment. And it would be a decrease to cash, so you would put it on the credit side of the T account because you purchased the equipment with cash. Now the last transaction is you bought cash for $200. You bought supplies, for $200. So for this transaction, you would debit supplies for $200 because you're increasing your account because you bought more. And you would credit cash for $200 because you paid for the supplies in cash. So after posting each transaction, what you would do, so for the cash account, you would add up all your amounts you have on the debit side of the T account and all the amounts that you have on the credit side of the T account, and you would subtract the credit side from the debit side. So this would be $3,200 minus $1,100. So that would give you a total of $2,100. So so for each asset account, the total should always be on the debit side of the T account. So you do the same for supplies. Now supplies doesn't have anything on the credit side, so you just add up all your amounts on the debit side and you get a total of $700. Equipment, you have one amount on the credit side and you have two on the debit side, so you add these up on the debit side, so that will give you a total of $6,500. And then you subtract the line credit that you have of $1,200, and you get a total amount for the equipment account of $5,300. Now for furniture, furniture is kind of like supplies in that you don't have anything on the credit side, so you just add up your amounts on the debit side of the T account, and your total amount for furniture account is $1,900. So let's recap what you learned today. Today we talked about business transactions and how it affects an account. So whenever you purchase an asset with cash, it will decrease cash, so it will go on the credit side of the T account. And then whatever the asset was that you purchased, it would increase, so you would put it on the debit side of the T account. And then once you post all your transactions, you will subtract the credit side from the debit side, and your total balance should always go on the debit side of the T account when you're talking about asset accounts. Okay, so I hope that you learned and understood everything that I said today, and I hope to see you next week on Simply Accounting.